Heavy is the head that has to manage all of this.
Hey everyone, welcome back to my channel.
We're now incentivized to buy what we already buy.
Fumbling through college had me building.
I also got some done on the other side.
And that was right around, I would say, May, maybe, right before renewing the lease for this property.
Welcome to the channel, Martha.
Thank you for having me here.
Oh, I was going to say, I am getting up there in age, I'll tell you what.
Bills paid by other people, life was never this good. I had to step back, knowing that it's...
So you want to make money, but you don't want to work super hard in order to get it. Well, let's talk about how we can achieve that. The first thing that I did was to get invested in the stock market. Now, this requires you to set some money aside from your paycheck in order to excel. And there's many ways to do that. So the first thing is to create a budget. Once you create a budget, you now know how much money you have every single month, how much money you're spending on miscellaneous things, keeping money aside for a rainy day in your savings account, and then whatever is left over, you're then able to invest. Another way to get started in investing in the stock market is if your company has a 401k. Regardless of employer match, this will allow you to start investing directly out of your paycheck, so you don't even have to worry about how you're going to get this money invested. It is done automatically, and then you can use the rest of your paycheck how you see fit if you're not someone who is really good at managing money. This way, when your paycheck comes to you, it's already deducted the expense that would go towards your investments, and so you can just focus on paying bills and other things and start to prioritize that way. Another way that you can ensure that you're investing successfully is if your company has an employer match. This will allow you to invest the minimum up to the match or even more, and the company will then match 4%, 3%, 2%, 6%. I've even seen 7% in some cases. This will give you an extra leg up and allow you to make more money over time versus just relying on your income solely. Your employer is giving you an extra leg and an extra boost. Now, when I started investing in the stock market, I was 18 years of age. I became much more aware of what I needed to do in the stock market by the time I was 22 years of age. So that took a little bit more than 4 years for me to become what I would consider an expert in the stock market. Since then, I have grown exponentially in stocks, and I understand so much more about it. There are many types of investors in the stock market, from dividend investors, from growth stock investors, to swing traders, day traders, and there's a lot of buy and hold positions. Now, I do not contribute investing to being a options trader, right? That's trading. We don't want to get in the space of trading and calling that an investment. Now, yes, can you make money and lose money in trading just like an investment? Absolutely. But there's a lot more risk involved in trading than simply investing, buy and hold long term, or if you're doing even short term trading, which let's just say short term is less than 30 days. Okay, for the sake of conversation. Now, most investors would say that short term is less than a year. So if you buy something and you're turning it over in less than a year, that is considered a short-term investment, and that is considered more risky. So if I said I'm going to buy, I don't know, let's think about a company that I don't own. Let me say Chevy. I'm going to buy Chevy. And again, I do not own Chevy, nor am I endorsing Chevy, nor am I telling you to go and buy Chevy stock. But let's say I bought some Chevy stock. If I were to sell it in less than a year, that is a short-term investment. If I was to hold it for more than a year, it would be considered a long-term investment. So when you're listening to long-term investors, this is typically a lot less risky because they're typically telling you, hey, I'm buying this company, I truly do believe in it, and I'm willing to hold it for up to a year. This also does help and support the businesses that is able to use some of that money to either do buybacks, to either invest more into the company itself, or maybe if they pay a dividend, they're able to cash you out a dividend as a thank you for investing in them. I absolutely love dividend stocks. I am actually a growth dividend stock investor, which means I focus on dividend stocks that grow over time, not just pay a dividend, but actually grow over time. I'm not looking for the highest paying dividend stocks. I actually look in the realm of about 2% for dividends, while the growth I'm looking for upwards of 30% on a year-to-year basis. So this allows me to average around 26 to 27% in the stock market over the course of a year, which is significantly higher than the 10% to 7% that a lot of people are doing within the markets. Now, dividend stocks also allow for a boost of about 2% to your total portfolio averages. So if you're someone who averages about 7% in growth, a dividend stock investor would average about 9% with the same portfolio, if that makes sense to you. Another example would be if you average 10% on a year-to-year basis, a dividend stock investor would average 12%. That doesn't necessarily mean that all dividend stock investors are beating growth stock investors. Absolutely not. For some people who are just simply growth stock investors, buying Amazon, Google, Tesla, and I believe Facebook would have almost assured that you would be a dividend stock investor any day of the week, and you would have probably netted upwards of 30% annual returns if you had just bought those companies over the last 5 years. So I'm not endorsing any companies nor telling you to buy any of them. I'm just an average guy on YouTube, but this is just simple math. You can do the research for yourself, and you would understand that a 30% return in the stock market is pretty damn good. So again, stocks have always been the easiest thing to get involved in. A lot of people who are not stock market investors don't really know how easy it is to get involved in this and how much money can truly be made. Before I even started getting into real estate investing, I was already making tens of thousands of dollars within the stock market, and that actually allowed me to buy my first home. Now, did I also save money to buy my home? Absolutely. But a lot of people discredit the stock market who don't necessarily understand it, and it's been around for over a century. It is truly, truly one of the best vehicles to retire with and to retire on. It is what people are retiring with today more than any other generation. You need one primary residence and you need a 401k or Roth IRA. And where is that located? It's located in the stock market. So again, one of the best ways to make money, I'm not telling you to get a side job. I'm not telling you to get a side hustle in order to start investing, but that would actually be ideal. For example, if you're already living off of your income Monday through Friday and you are blessed enough to have the weekends off, maybe you take a job for the next 10 years where you simply work on the weekends, driving for Popeyes, Pizza Hut, whatever. And all the money you get from that, minus gas expenses, you put into the stock market. You put it in just the S&P 500. Let's say you make $200 a week after taxes from that job, and you've put $200 a week away every single week for the next 10 years. You will retire a multimillionaire just from those 10 years if you were between 35 and 45 years of age. By the time you're 45 years old, you no longer invest for the rest of that duration. You would easily be at $1.8 million by the time you're 67 and a half. So from 45 to 67 and a half, what is that, about 22 and a half years, you would be at about $1.7 million, if not more. And that's just expecting a 7% return every single year. Now, the stock market typically has 7 good years and 3 down years over a decade. So you can expect within 22 years to have about 16 and a half good years. And you would also have about 6 bad years within the stock market. So 16 and a half versus 6, and you would be looking at a healthy retirement. So a lot of people think it's very, very difficult to make a lot of money, but honestly, it just requires sacrifice. And sometimes the sacrifice can be done early or it can be done a little later in life. But that sacrifice isn't forever. Like I said, this is someone who invested for 10 years flat and then no longer invested again. Right? But you dedicated yourself to that 10 years. You didn't use that money to do other things. You didn't necessarily have times to spend that money on dates and all this other stuff. You didn't necessarily go out every single day. I'm not telling you to kill yourself with work. I'm telling you to use about 8 hours of the day. So that's an extra 16 hours a week for 10 years to amass that fortune. But then from 45 to 67, you have your weekends to yourself. And this is considering maybe you never got a raise. Maybe you never had a 401k employer match. Maybe you didn't have all these things, but you still retired with dignity and almost $2 million in the bank. And so the power of the stock market is absolutely incredible. It is something that a lot of people do not take advantage of, even to this day. They liquidate their accounts for frivolous things that they can have at a moment's notice, right? Because they want a new car, they want a new house, they want a new this, they want a new that. And so it leaves people in situations where they're playing catch up more than being ahead of the 8 ball. And so a lot of people who are watching my video today may very well be playing catch up, and that's okay. But understand that a decade is all you need to absolutely transform your life. And it can all begin with the stock market. Now, I've talked a lot about real estate. I have literally playlists on real estate for my personal properties, from other people's properties, for interviews that I've done on people who are successful within the real estate environment. But this is specifically about stocks, one of the easiest gateways to entry even today in this high interest rate environment. If you like this video, make sure you leave a like, comment, and subscribe to the channel. You know I post every single day at 8 a.m. daily on YouTube and on Rumble, and I can't wait to see you in the next one. Peace.